Namaste. In this video, we will discuss about Ind AS 8 that talks about accounting policies, changes in accounting estimates and errors. Objective of this Ind AS is to prescribe selection criteria for accounting policies, and when we need to change accounting policies, what will be the accounting treatment at that time, and changes in accounting estimates and correction of errors, and disclosure in respect of accounting policies, selection, changes thereof, accounting estimate, and correction. Objective is to enhance relevance and reliability of financial statements and comparability of financial statements. Accounting policies are principles, conventions, bases, and rules and practices. Those are applied in preparation and presentation of financial statements. So next question is how to select accounting policies. In this aspect, Ind AS 8 says that if Ind AS exists, then we need to just apply it. However, if Ind AS does not exist, in that case, management need to use judgment in developing and applying accounting policy. So when we develop an accounting policies, we need to check that it represents the faithful financial position, financial performance and cash flows of the entity. It is prudent, it is neutral, and it is complete in material aspects, and it reflects the economic substance of the transactions. So to apply this, we need to check whether there is any pronouncement from IASB or any other accounting bodies if pronouncement of IASB is not available. And we need to check the conceptual framework for it and industry practice in this regard. And whatever policy we are applying, we need to take care that we have to apply it constantly. And accounting policy is to be applied only if it has material impact. If accounting policies application does not have any material impact, we are not supposed to apply it. It's optional. Changes in accounting policies will be done by the entity if it is required by Ind AS, or it results in more reliable information in respect of the financial position, financial performance, and cash flow of an entity. So only in these two cases, accounting policies will be changed. And transaction that differs substantially from earlier transaction, or application of new transaction policy on a new transaction, is not considered as a change in accounting policies, because this is application on a new transaction or transaction that has not happened. Again, that is substantially different from the other transactions. Apart from it, initial application of policy of revalue assets to be dealt with Ind AS 16, property, plant and equipment, and Ind AS 38. However, where change in accounting policy from revaluation model to cost model is considered permissible because of it results in more reliable information on financial position, financial performance, and cash flow, will be dealt by Ind AS 8 and will be applied retrospectively. Here difference is, if there is initial application, it will be out of scope of Ind AS 8 and will be dealt by Ind AS 16 and 38. But if there is change because of it results in more reliable information, in that case it will be dealt by Ind AS 8 and will be applied retrospectively. And when we change the accounting policies, we need to, or adopt new accounting policies, we need to check the transitional provision in respect of that. And if transitional provision is not available in respective Ind AS, in that case, we need to apply it retrospectively. When we are in business, we need to estimate a lot of things. For example, we need to estimate the net realizable value of the inventory that I am carrying at the end of the financial year, or how much will be the bad debt amount of the account receivable I am carrying, and the warranty liabilities against the sales that we have made in current year or in previous years, or what will be the fair value of financial assets and liabilities that entity is carrying, and the useful life of the assets. So when there is any change in the estimate, we need to adjust the carrying amount of the assets and liability, amount of periodic consumption in respect of the assets, for example, depreciation, and present value of the future benefits and obligation. So these changes are supposed to be done because in estimation, there is always possibility of change. These cannot be estimated accurately. So these estimates need to be changed when circumstances have changed or new information is available, or there is some development in between, or we have more experienced information. Because of that, we should change the estimate. Change in estimate due to new information, development, or experience is not considered as a correction of error. We consider it as a change in accounting estimate. But change in measurement basis is called change in accounting policy. When there is change in estimate, we need to apply it prospectively. If it is going to affect the current financial year, we will adjust it in current reporting period. And if it is going to affect the current as well as the future reporting period, we will adjust the both. Next topic is prior period errors. These are the omissions from misstatement in entities' financial statements for prior period arising from failure to use or misuse the reliable information. Prior period errors may be because of the mathematical errors or mistake in applying accounting policies or oversight, or because of the misrepresentation of facts or existence of fraud that has material impact. So we need to apply by restating the comparative amount for prior period presented, and if error occurred before period presented, we need to restate the opening balance of assets, liabilities, and equity for the earliest period we have reported. So this is all about IND AS 8 that talks about the accounting policy, changes in accounting estimate, and errors. We have discussed all the things, although not in detail, but in summarized form. So if you want to discuss in detail or have any queries or need any clarification, you may contact on the WhatsApp number given on the screen. This is all about IND AS 8. So let's meet with another video in coming days. Thank you very much. Namaste.